Sustainable investing has soared in popularity over the last 10 years, and this trend looks set to continue. According to PwC, growth in ESG funds is expected to outpace the broader industry, reaching a projected $33.9 trillion in assets under management by 2026. Some sustainable investors want to minimize global warming, while others want to support companies championing environmental and social change. Whatever your goals, in this video, we want to explore the world of sustainable investing and how to consider investing. Let's look at why sustainable investing has become so popular. 1. Potential business benefits. Sustainable business practices, such as reducing pollution and providing safe and diverse workplaces, may give companies an advantage over competitors. They can also help lower the costs caused by environmental damage, biodiversity loss, and social upheaval. 2. UN Sustainable Development Goals. The Sustainable Development Goals can help investors figure out areas of investment to support a particular goal. For example, investors can align their investments to help achieve gender equality and empower all women and girls, which is one of the UN's Sustainable Development Goals. 3. Tech advances. The need to live more sustainably is one of the driving forces behind advances in technology and science, especially in the areas of water security, renewable energy, and healthcare. The developers of solutions in these spaces might be worth considering for sustainable investors. Sustainable investing means different things to different people, so before we go any further, let's explore the main approaches. ESG integration uses information about how a company is run and its environmental and social related activities to find lower risk investments. In some cases, this involves dealing directly with a company's leadership. Thematic investments focus on sustainable themes such as climate change or healthcare that impact the triple bottom line: people, planet, and profit. For more ideas about themes, take a look at the Sustainable Development Goals. Impact investments have a positive effect on a particular environmental or social area. Now we've explained the basics of sustainable investing, here are some steps to consider as part of your overall sustainable investment goal setting. 1. Set overall financial goals. As with any investment, you need to understand your goals based on various factors, including how long you can afford to invest and how much risk you're willing to take. Once you figure out your goals, you can decide how to split your money between sustainable and traditional investments and across different types of investments, such as shares and bonds. 2. Set sustainability goals. Your sustainability goals reflect your values. The UN's Sustainable Development Goals may come in useful here. Here are a few questions you can ask yourself. What's the most important outcome? Would you like to focus on specific themes, such as alternative energy? What companies would you be proud to add to your portfolio and why? Are there any types of companies you'd like to avoid? Once you've come up with your goals, you should look to consider any possible trade-offs with the potential risk and return on your overall investments and seek diversification. 3. Review the portfolio. Check that your portfolio matches your sustainability goals and you feel comfortable with how much risk you're taking. 4. Select investments. It's time to choose your investments based on your investment objectives and overall portfolio allocations. For example, if you want to seek to reduce the amount of carbon dioxide produced by the companies in your portfolio, you can avoid those that use a lot of fossil fuels, such as steel manufacturers. Another example, if environmental impact is your goal and you're prepared to invest over the long term, then you may consider investing in something like green energy. But if you want to invest for a shorter period, a green bond may be more suitable. Lastly, maintain the portfolio. Check your portfolio to make sure it continues to meet your sustainability goals, as companies can change and new potential opportunities and risks can emerge. Sustainable investing gives you a chance to create a better future, both for the planet and for your portfolio. And the potential opportunities may allow you to exclude certain sectors or focus on particular themes. So, if helping protect the environment and supporting social change are important to you, think about how you can include sustainability in your overall investment goals.